Hello, I'm Ward Brown. One of the all-time great investors, Benjamin Graham, once said, "The market is a pendulum that forever swings between unsustainable optimism and unjustified pessimism. That pendulum has been in full swing for the last year and a half, from the unjustified pessimism last spring, although it was pretty dicey there for a while, to significantly more optimism recently. But has the pendulum swung so far to the positive that it justifies modifying our investment behavior?" Let's take a look. Most companies have reported their first quarter earnings over the last several weeks, and they're putting up just blowout numbers. Historically, stocks announcing results like that surge on the news, but that hasn't been the case this time. The more typical response has been a shoulder shrug. So what gives? It's an interesting juxtaposition to last year at this time when companies reported terrible earnings and their stocks responded by marching higher. Interestingly, both responses make sense. After last year's first quarter, everyone knew earnings would be awful. This year, everyone had a pretty good idea that earnings would be extraordinary. Thus, last year's positive reaction to bad earnings was a good sign. It meant the bad news was being discounted on the belief that better times were ahead. This year, the market's more tepid response to great earnings is also a good sign. It implies investors are not getting ahead of themselves. In other words, they aren't more optimistic than they should be. Many of the companies benefiting most from those better earnings are labeled as economically sensitive because they tend to react more positively or negatively to a growing or contracting economy. Bank stocks such as JP Morgan or Truist are economically sensitive stocks. In recessionary times, loan losses go up and loan demand goes down. No good for banks. Likewise, as the economy improves, loan demand picks up and loan losses shrink. An expanding economy thus makes a positive difference to them. A company like Boeing is another example. In a recessionary environment, people travel less, so airlines order fewer planes. Bad news for Boeing. But coming out of a recession, orders go up, and with better times ahead, a stock like Boeing should improve. Throughout the pandemic, my colleagues at Argent and I have spent time talking about and discussing the path of the recovery. Companies such as Microsoft, which tend to have very steady earnings, are wonderful holdings to maintain through thick and thin. However, by tweaking the portfolio and adding a bank or a company like Boeing, we can hope to benefit as the recovery unfolds. That type of strategic shift made over the past 12 months has worked well. Going forward, inflation is an issue that has come front and center. High prices are everywhere. Things like lumber and steel and corn have been surging. Labor costs are also going to be a growing challenge. Just talk to any factory owner or a restaurant operator. They just can't find enough workers. Higher costs for materials and labor, along with growing issues with supply lines, everything is just taking longer to get here. Computer chips, for example, and that takes a toll. Issues such as these will create headwinds throughout the balance of 2021 to many companies. Nonetheless, where there is a headwind for some, there are usually opportunities for others. But that's a topic for another day. We have 4 great investment products at Argent: large cap, mid cap, dividend select, and small cap strategies. If you have thoughts, questions, or comments, feel free to give me or any of my Argent colleagues a call. Thank you very much for watching.